Hello everyone, here are the latest market news on March the 19th, 2020. ECB launches extra bond buying program. The European Central Bank unveiled an extra emergency bond buying program worth €750 billion, $820 billion, in the latest attempt to calm markets and protect a euro area economy struggling to cope with the coronavirus pandemic. The decision was made during an unscheduled meeting on Wednesday night. ECB President Christine Lagarde reinforced the message that policymakers will do all they can, saying there are no limits to our commitment to the euro. European bond markets rose from the open Thursday, with Italian 10-year yields lost over 100 basis points, and the gap between the debt of core nations and more stressed ones, a key indicator of stress, narrowed. In Germany, 10-year yield also fell by 80 basis points, while Greek bonds, which will be bought for the first time, saw yields drop 45 basis points. Euro declined 0.2% to $1.0894 in Frankfurt. Lufthansa cuts 95% of capacity, 6 public aid. Deutsche Lufthansa AG will reduce 95% of capacity, grounding 700 planes, as Europe's biggest airline confronts the deepening crisis around the coronavirus pandemic. Only a handful of flights will survive, some for repatriating German stock abroad and upholding supply chains, Chief Executive Officer Carsten Spohr said on Thursday. Lufthansa is expected to seek a loan from the German government, which could also take a stake as part of a rescue package. The longer this crisis lasts, the more likely it is that the future of aviation cannot be guaranteed without state aid, Spohr said, after new bookings for the week through March the 15th fell almost 70%. Overall, carriers from discounter Ryanair Holdings plc in Europe to Qantas Airways Ltd in Australia, Emirates in the Gulf, and Delta Airlines Inc. in the US are also grounding planes and furloughing workers due to virus impact. According to the International Air Transport Association, the airline industry may need $200 billion in support to weather the crisis. Dow losses gains made under Trump's presidency. As Wall Street extended its deep sell-off during previous session over fears about the coronavirus, the Dow Jones Industrial Average effectively erased the last of the once sizable gains it made under U.S. President Donald Trump. Trump's new measures failed to maintain the struggling stock market, with the Dow Jones declined almost 11% before partly recovering to end down 6.3%. By Wednesday's close, the Dow was up just 0.4% from where it was on January the 20th, 2017, the day of Trump's inauguration. The Dow is still up almost 9% from when Trump unexpectedly won the presidential election on November the 8th, 2016. The S&P 500, a broader measure of the U.S. stock market, also fell on Wednesday, losing 5.2%. This left it up just 12% since Trump's 2016 election and higher 6% from his inauguration. Drug trials in China show mixed results. Drug trials on coronavirus patients in China yielded mixed results, with an HIV pill showing little benefit and a flu medication made by Fujifilm Holdings Corp resulting in faster clearance of the virus. The combination of lopinavir and ritonavir, marketed by AbbVie Inc. as Kalerta, didn't improve the condition of severe COVID-19 patients in a randomized controlled trial of 199 patients. The research was published Wednesday in the New England Journal of Medicine. A separate study of 80 patients receiving Fujifilm's favipiravir or Avigan found it helped clear the virus from patients a week earlier than the HIV medicine and was associated with improved chest symptoms shown on CT scans. Meanwhile, the favipiravir study, which wasn't randomized, was conducted in a different group of patients and at a later time point when doctors might have discovered better ways to care for patients. Evercore ISI analyst Umer Rafat said in a note.